Welcome back, guys. We've seen where the whole evolution of money started from, and right now we talked about starting from trade by barter system, which is a means of exchange as at then, and to what we have as cryptocurrency, where Bitcoin came in as the first cryptocurrency, and this is where the whole world is leaning towards. This is the future of finance, and that's what we'll talk about in this session. In this lesson, we are going to talk about what cryptocurrency is actually. Cryptocurrency, like I said, is a means of exchange and is a type of money that only exists in the digital form. You don't have it physically, you can't touch it or feel it, but you can use it to buy things, send to people, or save just like regular money. If you're online, you should know something about cryptocurrency because that's where the world is going to. Like we all know, traditional money often requires banks or payment processors to move it around. With cryptocurrency, you can send money directly to someone else without needing a bank or any other middleman. That's the good part about cryptocurrency. So we could say it is more like efficient because you don't need anyone, you don't need governments to say to determine how to send or the ways to send. All those things are not needed in cryptocurrency. So these are things cryptocurrency brings to the market. Then from what cryptocurrency is, we need to look into the concept of decentralization and blockchain. Cryptocurrencies work on something called a blockchain, like I mentioned earlier, and blockchain is a special kind of record book that is shared across many computers. Each time someone makes a transaction, it is recorded in this book for everyone to see and agree on. This makes it really hard to cheat or change the records. That's something about this. Record taking is very, very important, and that's what blockchain offers to cryptocurrency. And this made it decentralized because you need a record system. That's what the banks are there for. That's what central banks are therefore that's why the governments are into this controlling our means of exchange. But right now with cryptocurrency, blockchain enables that, and blockchain serves as a record book for us to record all the transactions that goes on in the cryptocurrency world. That's all about blockchain. So this enables decentralization, and that's why we talked about this, and we are going to as well talk about the benefits of cryptocurrency. There has to be a level of advantage over fiat currency, and this is why the adoption of cryptocurrency is going to happen. These are the benefits of cryptocurrency. So the earlier you adopt the system, the better for you, and one of those benefits is that cryptocurrency is fast and cheap. Sending money with cryptocurrency can be faster and cheaper than traditional methods, especially for international transfers. Are you seeing where the concept of cryptocurrency is coming from? This makes it easy for anyone to send money from anywhere around the world, and one of the benefits again is accessible. People without access to traditional banking can use cryptocurrencies to participate in the economy. There are people that don't want government involved in their business, and this is a means for them to transact. This is a means for them to exchange. So cryptocurrency has enabled a whole lot of people that didn't have access to making this kind of transactions from anywhere in the world to start making those transactions. So it's accessible to people that don't want to be involved in traditional banking system. And ownership is one of those benefits. Again, you have control over your money without relying on banks. You can control your money from your phone, though banks, they have a way of doing that right now. But something you should know about cryptocurrency is that you have control over it because it is on your phone. You can do whatever you want to do with it from your phone. So this is the ownership part of cryptocurrency that makes people want to adopt this technology. Now, there are challenges that comes with all these benefits. Though we've seen some of these benefits, there are a whole lot of benefits, but there are challenges that comes with it. One of those challenge is market volatility. Cryptocurrency is so volatile. It's so volatile. Cryptocurrency prices can fluctuate rapidly, leading to potential financial losses due to unpredictable market movements. You know, you've heard, oh, cryptocurrency is this, cryptocurrency is bad, I lost all my money. This is the risks that comes with cryptocurrency. If you are not properly educated, you would make mistakes because of the market's volatility. It's so volatile. Another challenge and risk that comes with cryptocurrency is the security part, the security challenge. cryptocurrency exchanges and wallets are susceptible to hacking and phishing scams, posing risk of losing funds. Never trust the internet. That's the concept of this. You should never trust the internet because the internet is a place where cyber threat is, and this pose like security risk to people. With cryptocurrency, you can easily be hacked if you are not careful. So that's one of the risk and challenge it poses. Unlike traditional banks, the banks will take full responsibility if anything hacking or this happens. The bank take full responsibility. But with cryptocurrency, you cannot hold anyone accountable. You are the owner of your crypto and it is yours. You take all the risk. That's something about it. That's one of the risks that comes with it. So you have to be careful. You can easily be hacked, and once you are hacked, it's your responsibility to take. It's no one's responsibility. And there's another challenge that comes with it: the regulatory challenge of the government. Like I said, there are uncertain regulations and government interventions that can impact the legal status and value of cryptocurrencies. No one is powerful than the government. The government can decide to influence the crypto you are having. The government can adopt the technology, they might not. All this influences the way crypto works. It influences the market value. It influences everything you see. News around the world influence cryptocurrency. So that's something you should know. The regulatory risk is one of those things you should look out for. And another risk is lack of customer protections. Like I've said earlier on, you have to take responsibility. You take responsibility for yourself because you are the owner. When you are taking full ownership over something, you have to be responsible for it. That is why cryptocurrency transactions are irreversible, lacking traditional protections like refunds or chargebacks. There's nothing like that. Once you make a mistake in wallet address, you make a mistake to where you send money to, your money is gone. That's one of those challenges. So these are things you look out for. So you should be very attentive and sensitive when it comes to cryptocurrency. And we have other challenges like technical risk, loss of private keys. There are something called private keys, or software bugs can result in permanent loss of access to cryptocurrency funds. So these are things you need to consider, especially your private keys. Like a lot of people do this mistake, they get to lose their private keys, and once you lose your private keys, your cryptocurrency is gone. It's gone just like that. That's one of those risks. That's one of those things. So pay attention, be sensitive. And another risk involved is investments. Cryptocurrency markets are susceptible to scams and Ponzi schemes with limited historical data for informed investment decisions. So this is one of those things. The coin you adopt could burn. There's something we call burning. It could burn to zero. You might have it this high at 100, then it burns to zero. So your investment is gone. These are one of the risks you take. So you don't put money you can't afford to lose. So you put money you can't afford to lose. That's something about it. You are making an investment that is risky. That's something you should know about cryptocurrency as of now. And there's operational risk. Storing cryptocurrency on exchanges exposes users to risk of exchange failures or custodial losses. So this is one of those risks as well. We hope any of this will not happen. This is why you need to be informed. You need to know the risk that comes with it. And there's environmental concerns. Like I said, things that happen around the world influences cryptocurrency big time. And this is one of those environmental concerns you should look into. This is one of those challenges. After going through all these challenges and risk, let's talk about cryptocurrency itself. We have a whole lot of cryptocurrency. There are many different kinds of cryptocurrencies. Bitcoin was the first and is the most well known. In fact, cryptocurrency and Bitcoin are so deep into each other because most people see crypto as Bitcoin. Most people even call cryptocurrency Bitcoin, and this is why it's just like Bitcoin is synonymous to cryptocurrency. A lot of people feel cryptocurrency is Bitcoin. Bitcoin is cryptocurrency. Are you getting the point? Because it was the first, it came first, and that's why we have this popularity. And this popularity actually made it rise in value. This is one of the reasons why Bitcoin is the most valuable cryptocurrency in the world. And it was the first currency. It came at a very cheap rate, but right now it has risen in value. That's something you should know about Bitcoin. Then from that, how profitable is cryptocurrency? We talked about Bitcoin being the first cryptocurrency we have in the world of cryptocurrency. Bitcoin's journey began with very low values in its early days, pennies, like reaching significant milestones. So let's look at some of these milestones. People bought Bitcoin below $1 at a point in time, but look at how it shows. Bitcoin came 2009. The concept was first introduced 2009. Then in 2013, it surpassed $1,000. I told you it was bought below $1. There was a time it was bought below $1. The first Bitcoin rate is below $1. In 2013, it surpassed $1,000, just like 4 years to the time it was introduced. Bitcoin was introduced 2009. Then it peaked near $20,000 in late 2017. Are you seeing how the growth is? It hit around $65 in 2021. As of mid 2023, it fluctuates around 30,000 USD. Early investors saw immense gains, but Bitcoin's volatility means potential for both gains and losses, making it a high risk investment. Right now, Bitcoin is over $60,000. As at last year, 2023, it was $30,000. Just look at it, between that last year to now, that's risen times 2 of what it was last year. So that's something you should know about cryptocurrency. That's something you should know about how profitable it is. This is Bitcoin, the first cryptocurrency. This is how it shows from $1,000 in 2013 to over $60,000 right now. And that's something you should look out for. That's something that makes cryptocurrency profitable. It is highly risky, but it is highly profitable as well. It depends on how you approach it, because we have a whole lot of coins and it depends on the cryptocurrency you adopt for yourself. That's how profitable cryptocurrency can be. And in the next lesson, we're going to talk more about this course. For now, you know what cryptocurrency is all about. It's a means of exchange. You know how valuable it is. You know how risky it is. You know everything you need to know about cryptocurrency, how it is not a centralized finance. It is decentralized. These are things you need to know. These are the knowledge you need to know. I'm going to show you more of those in this course. I'm going to show you how to buy crypto, when to buy it, where to buy it. Just follow this course step by step. You are going to understand what crypto is all about, and at the end of this course, you'll be able to do anything with crypto. You decide for yourself which coins to buy, which coin not to buy, how to make analysis. These are things you need to know. I hope to see you in the next lesson. See you there.